I'm Teresa Matic with the Investing News Network. Here with me today is Joe Mazumdar with Exploration Insights. Joe, thank you for joining me.
Thank you for inviting me.
So you recently left Canaccord Genuity to join Brent Cook at Exploration Insights. Why was that?
Well, I've worked on the sell side for about 6 years, and it's a job that takes a lot out of you, and I have a lot of respect for people that can do it for a long time. I got to the point where I wanted to work on my own a little bit more, and this basically offers me that opportunity.
Is that your favorite thing about working with Brent so far?
It's more freedom to look at any company that we particularly want to and diving as deep as we need to. And the whole idea is it's what we're buying and selling, so there's no strings attached with respect to anything else.
Okay. And on that note, Rubicon has been in the news quite a bit lately. A lot of people are not too happy. What are your thoughts on that?
Well, I mean, the issue was, as everybody's, has mentioned, they went ahead with the scoping study, but they got financed at the scoping study level. They got financed with a stream from Royal Gold. They got financed with equity from the markets, and they also got financed with debt from the Canada Pension Plan. So you had a few layers of, hopefully some due diligence done. The due diligence apparently wasn't great. And also in terms of the resource, I think the issue is that the geology, the resource modeling around the geology wasn't very good, but it's not an issue just for Rubicon. We've seen that with Midway. I've seen companies that are going into construction that redo their resource. So we've seen a lot of that. We've seen that at big company level, small company level. The problem with a small company incident is that's all they have, and there's nowhere to hide when that happens. Whereas with another company, if that happens, and I've seen it with big companies, they've got a portfolio of assets and they could just move to another asset. With a single asset company, there's no opportunity to do that. So the risk is the same in terms of development assets with a big company, small company, in terms of this issue with geology, doing the resource model, and then building off of something that's a little bit more uncertain. All I'm saying is because of the diversification in a bigger company, you're mitigated a bit. You're not mitigated with a single asset company, hence the risk reward. It could go to zero, or it could give you what they like to call a triple bagger.
Right. Okay, that's interesting. Yeah. And you're not known for being shy about what you say, so I wanted to ask, what are some red flags that investors can watch out for when they're looking at investments in junior or the mid-tier companies, which is more what you cover?
Well, I mean, if we look at if we look at the mid-tier companies that are cash flowing, a lot of the issues with a single asset development company may not be there, like a single asset development company that's got the resource, now building up a technical study, maybe a resource into a feasibility study through a scoping study. You look basically at the geology, how well it's basically mapped out. And, one of the big things that I have a problem with is that some people will just show you a leapfrog model and have no connection to geology. And geology is really basic, and if you don't have that right, it's hard to get anything else right. And that can happen at any stage. With the producing company, you tend to get a little bit more comfortable that they're already operating it and they understand it better. But then you're going to look at cash flow and look at working capital. So there's different sort of issues that you're going to look at with depending on the stage.
Okay. And what are two interesting companies you can tell us about right now?
Well, in terms of looking at the smaller junior producers and mid-tier companies, what we looked at about a month or more than a month ago when I joined was Claude Resources and Lakeshore Gold. And the reason I like those two is one, they're operating. They're actually generating free cash flow in this environment of a flat gold price. And they also are well exposed to a weakening Canadian dollar, because as we've seen with the strengthening of the U.S. dollar, the fall in oil prices and overall in commodities, a lot of the resource currencies have gone down, like Canada and Australia. And companies like that, they've seen the gold price go up in their local currency. So they've done quite well. And both these companies are paying down their debt. They're obviously fully permitted. They got good management teams, and they're going forward making money, which is obviously what you're looking for.
Absolutely.
Yeah.
Okay, and finally, it's been a tough few years, and can I get your thoughts on the junior mining space heading into 2016?
Well, in the little that I've seen with I've just been to 3 different investment conferences over the last 5 days, and gauging from the audience and gauging from other people that have been to these the year before, it seems like the interest is there, and I think the issue right now is people are looking at what's out there and trying to pick the companies to hold, thinking that it's bottomed. And now they're doing their due diligence in terms of companies. So people are taking a better look at these companies in more detailed, I hope and I believe, than they did maybe 5 to 7 years ago when the bull run happened. So I'm hoping that people do a lot more work, and so we don't have the 500% and then going down to 0 anymore, that people actually can see these things go, and the filtration system is there.
Sure, that makes sense. Thank you for joining me, Joe.
All right. Thank you very much for inviting me. Cheers.
I'm Teresa Matich with the Investing News Network.